Fusion Mobile, quality e-learning experience on the go.
Welcome to Fusion Mobile e-learning platform. I'm Olokobi by name. I'm the account teacher, and how we'll be treating subsidiary book in this class. So in our last class, we talked about subsidiary books. There wasn't much explanation on that, so we are going to treat that now. The meaning of subsidiary book, types, that is the sales day book, as we treated in the last class, sales return day book, purchase day book, purchase return day book, cash book, and journal proper. The meaning of sales subsidiary book. I said earlier in our last class, we said subsidiary book is the book of original entry or prime entry, in which transactions are initially recorded. So, subsidiary book is one of the book of accounts in which you first of all record transaction whenever they occur. So, let's begin with the sales day book. The sales day book. The sales day book is also one of the type of subsidiary book in which goods sold on credit are first of all recorded. The goods sold on credit are recorded in the sales day book. So any transaction involving cash are not recorded in this book. While also any transaction involving fixed assets that are bought on credit are not recorded on this book. So the procedure in the preparation of sales day book is as thus. Number one, the sales day book is entered daily whenever the transaction occur. The number two, the sales account is credited in the ledger. Number three, customers accounts is debited in the ledger also, using the principle of double entry. So we can look at the formats of sales day book. How the sales day book look at? Generally, we have sales day book in this form. We have the dates, we have the particular of transaction, you can have the folio and the amounts and total. So this is the format of sales day book. We can have 1st January, we can have 3 packets of sugars for certain amounts of money. So we can have 2 bags of rice, certain amounts of money, they now amount to this as the total. So this is the format of sales day book on the board. So we have on the board illustration 1. Enter in the sales day book for the month of August 1986 and post to the ledger. August 1, sold to Roger Mina 20 bags of sugar at 14 naira each, 12 plates at 114 naira each. In August 12, sold to Shoromu 12 bags of cement at 4 naira each, 5 packets of tea at 15 naira each. Then a trade discount was being offered at 10%. Also, we have August 27, sold to Mumba 15 shoes at 65 naira each, 10 packet shirts at 13 naira each. We have trade discounts at 5%. Here we'll be looking at all this trade discount because we haven't explained that in our lesson. Trade discount. Generally, discounts serve as a reduction in the price of goods and services, and there's different reasons based on the type of discount. There are different reasons for offering discount based on the different type of discount. In this instance, which is trade discount, it's usually given by the seller of goods and services to encourage the buyer to buy more of the goods. That is, whenever the trade discount is given, this buyer seller is actually encouraging the buyer to buy in bulk or more of the goods. So trade discounts serve as a reduction in the catalog price or invoice price of the goods. So let's do this. We have a solution. So the first thing in the procedure of sales day book is for us to what? Enter our sales day book daily as given in the procedure. So we have the date, we have the particular of the transaction, in folio we have the amount and total. So the first transaction here occur August 1st. So we sold goods on credit to Jamila. Okay, so sold 20 bags of sugar at 14 naira each, and that gave us 20 times 40, that amounts to naira and naira. That amounts to 800 naira. So next thing we have 12 plates. 12 plates at 140 naira each. So we have 140 naira times 12 give us 12 plates at 140 naira each. That gives us 12 times 140. That amount to 1,680. So total goods sold to Jamila. So we have 800 plus 1,600 plus 1,680. That gives us 2,480. So August 12. So we have another transaction also. We sold to showroom. So we have showroom. So we sold 12 bags of cement at 54 naira each. So 12 bags of cement at 4 naira each. So times 54, that gave us 648. Well, also we have 5 shoes as 65 naira each, and that gave us 5 times 65, divided to 5. So total 648 plus 325, 973, and trade discount 10%. Trade discounts serve as a deduction in the catalog price, the invoice price, of 5% of the invoice price, 973. So sorry, actually is 10%, so that gives us 97 naira 30 kobo. So that is not a significant figure, so we can take it as 97. So minus 97, that gives us 876. So well, again we have August 27. Can then close this easily. August 27, we have sold to Muiba. You can write that with the details. 15 shoes at 65 naira each. Actually, this should have been 15, not 65. So 5 times 16, that gives us, I think that gives us 75 actually. So we should have 648 plus 75. We should have 723, and 5% of 723, that gives us 72. 30 kobo, that is not a significant amount. You can take it as 72 minus 72, 651. Again we have good so to move about 15 shows. 15 shows, okay, it's actually packet. A lot of error, sorry for that. 5 packets of tea at 15 naira each. 15 naira each. So again we have, I think now we've done that already, 15 shoes at 65 naira each. So again we have 10 packets of shirts, packets at 13 naira each. So we have 15 times 65, so that gives us 975. Well, so we have 10 times 13, that gives us 130. In the addition, 975 plus 130, that is 1105. Plus we have to deduct the less trade discounts. Okay, we have an illustration. Size, enter in the sales day book for the month August 1996 and post to the ledgers. August 1, we have sold to Roger Miller 20 bags of sugar at 140 naira each, 12 plates at 140 naira each. August 12, we have sold to showroom 12 bags of cement at 45 naira each, 5 packets of tea at 15 naira each. Then we have a trade discount at 30%. August 27, sold to Muyi bags at, that is 15 shoes at 65 naira each, 10 packets shirts at 13 naira each, trade discount at 5%. You will be looking trade discount. Yeah, trade discounts or discount generally is usually offered in business, which serve as a reduction in the selling price of goods and services. So whenever discount can be given or it can be offered in different ways based on the type of discount. Basically, we have type of discount, that is the trade discount and cash discount. So in this instance, the trade discount, there will be a reduction in the catalog price of the goods or the invoice price of the goods. So this discount is usually offered to encourage bulk purchase. So in order for the buyers to buy more of the goods, so the discount will be offered. So let's look at the solution. So the procedure is for us to enter the what? The sales day book daily. So the formats given previously is the date, we have the particular, so we have the folio, So we have amount and total. So and there close this. We can easily close this. So dates, we have August 1. So sold to Jamila. I can easily write that. So we have 20 bags of sugar. At 140 naira each, rather, and that give us 800. Also we have 12 plates. We have 12 plates at 140 naira each. That gave 1,680, and in total that is 2,480. So no trade discount is given. So that is all about the transaction of Roger Miller. So goods sold to Roger Miller. So August 12, we have sold to Showroom. So 12 bags of cement at 45 naira each. So we have 12 bags of cement at 45 naira each, and that will give 12 times 45, 540, and there again we have five packets of tea at at 15 naira each. That will be 15 times 5. That gives us 75. So we have plus 540, 6. Okay, that should be yes, 615. And trade discount. Trade discount is given. So we will have to deduct that of 10%. 10% of the catalog price, 615. That is the invoice price. So that gives us, let's say, 62 approximately. So we have minus 62. And so that gives us 553. So that is all about Showroom. And again, we have last one, August 27. So we have Muibats, 15 shoes at 65 naira each. So we have sold to Muibats, and the Muibats 15 shoes at 65 naira each. 15 shoes at 5 naira each. Okay, and that gives us 15 times 65. So we there have 975. We also have 10 packets shirts at 13 naira each. 13 naira each. Now amount to 130 naira. So we have 130. So 1105. Then trade discount, %. So 5% of 115. So times 005. So we have approximately 55 naira. So we can deduct. So that will be 1050. So in total, addition of everything, That will be the sales. We have 2,480. Right, so that goods sold to Jamila. We have showroom 553. Then we VAT 1,050 naira. That gives us 4,083. Total amount of sales. So the next thing is for us to open the ledger account. So post the entries to the ledger account. So we are going to have the customer's account, while also we're going to have Roger the sales account. So the customers are Roger Miller, Showroom, and Muibat. So we have to post to the ledger. So the ledger account will be sales account according to the procedure. So sales accounts will be what? Credited. So we have Naira. So we have August as the date. So we can have the sundry, the total amount of sales by 4,083. 4,083. How's the sales? Same thing. We have the what? We have the customer's account. Customer's account will be debited in the ledger. So we have the Roger Miller accounts. So his account will be debited, and that is, we have the correct August. The corresponding accounts, we have sales will be written here, and that will be 2,483. Also we have showroom account. So his account also will be debited. So we have sales, which is 553, and also we have Maybat accounts. So his account will also be debited. Sales, that will be 1,015 naira. So in the ledger, the sales account will be credited, while each customer's account will be debited. So we've done the sales day book as the subsidiary book. So we have to move to sales return day book. Which can be called return inward day book. The sales return day book, as said in the previous lesson, that shows the total amount of goods previously sold to customer, which are then returned back to the business or to the firm. So this can due to some certain reasons in business. Maybe the goods being sold to the customer are of wrong type, or there is defaults in the goods being sold to them. So these goods will be returned back to the business. So whenever we have goods previously sold on credit to the customer and then be returned back to the business, so you have to open the sales return day book as the initial book to be opened in the book of accounts. So we have sales return day book. The procedure of the sales return day book: firstly, the sales return day book will be opened daily or entered daily. Is entered daily, while also the sales return accounts in the ledger the sales return account in the ledger is debited, while the third procedure, customers accounts in the ledger is credited. So while the goods are being returned, in that instance the customer becomes the what? The giver of the goods. So the customer's account will be credited this instance. So the formats, you can easily have the formats. The formats, same thing with sales day book. So we have sales return, day book as the heading. So we're going to have date, purchase, particular order. So we're going to have folio, amount. Thereafter we have total. So this format. So we can have details here as 12 packs, 12 packets of sugar at 15 naira each. 12 packet of sugar returned. So we can have the amount as this, for instance. So we can also have 20 bags of rice returned. We can have the amounts, then we'll find the total. Will that give us the sales return day book or return inward day book? Okay, we have an illustration. So write up the sales return books of Femi and Sons for the month of August 1996 and post to the ledger. So the goods previously sold to each customers, that's the Roger Miller in the first example. Some of the goods were being returned back due to some certain reasons, as earlier said. So also some goods sold to Muribat, some of it has also returned back to the business. So we have to prepare the return inward or sales return day book. So sales return day book. So we have dates. Generally, we have the particular. So we have the folio, amounts, and then total. So we have August 3 as the date. 1 bag Ojamila, the customer. So we have 1 bag of sugar at 40 naira each. So we have one bag of sugar as 40 naira each. Then that gives us 40 naira. Also, we have 3 plates at Jamila return 3 plates also at 140 naira each. So we have that amounts to 3 times 140. So that gives us 420, and in the total we have 460 from Jamila. So when they close this, so August 30, some goods also were returned by Muibat. So you have Muibat. So we have 3 shoes, 3 shoes at 65 naira each. So 3 times 65, we have 195. So again we have 2 packets shirts at 13 naira each. That gives us 26. So you have 221, and trade discounts given earlier. So 5% of 221. So that amount to 11 naira. So that gives us 210. So in total we have 670. This is the amount of return. So return meaning what day book, or sales return meaning what day book has been entered as given in the procedure. So we are supposed to do ledger. So we are going to have the return or sales return accounts, which is going to be debited. So we have sundry, August, sundries, which is the total of all sales return, 670. So we are going to open respective customer accounts. So we have the Roger Miller account, and credit and debit. So the customer account will be credited August. So we can write sales return or return inward, any of it. How much? 460 by Roger Miller. Then also we have Muyibat accounts. We have credit and we have debit. So his account to be credited, we have August. So as I got 30 here, August 3. So we have sales return. How much? 210. So we've done the sales return day book. Can thereafter move to purchase day book. Purchase day book. Okay. The purchase day book is the book in which goods bought or purchased on credits are initially what? Recorded. So whenever the goods are bought from the supplier by the business on credit, they are first of all recorded in the purchase day book. So any goods bought on cash, or whenever an asset is bought on credit, both of the transaction is now recorded in purchase day book. So only goods bought or purchased on credits are recorded in this book. So the procedure in the preparation of purchase day book, number 1 is purchase day book is entered daily. And number 2, purchase account is debited in the ledger. So number 3, supplier accounts, that are creditors, suppliers accounts is credited in the ledger. So let's talk about the format. The format is similar to the sales day book and sales return day book. It's the same thing. So we can move to illustration. So we have an illustration. Illustration 3. Write up the purchase journal as purchase day book of Femi and Son and post to the ledger for the month of August 1996. So we have August 12, bought from Coca-Cola 12 crate of Coke at 40 naira each, 5 crate of Fanta at 120 naira each. Then we have a trade discount of 20%. In August 17, bought from PZ Limited 140 bags of flour at 10 naira each, 400 soaps at 2 naira each, and that is subject to trade discount of 10%. So let's open our purchase day book, our purchase journal. So we have dates. So we have particular. In the folio, we have amounts. Thereafter, we have total. So we have August 12. Okay, we have Coca-Cola 12 crates of Coke at 40 naira each. So that gives us 12 times 40. We have 480. Okay, we have 5 crates of Fanta at 120 naira each. So 5 crates, 20 naira. We have 600. That gives us 1080 naira. Naira. So we have a trade discount. That will be 10% of 1080 naira. And that gives us, that should be that should be 108. In deduction, we have 972. Okay, that is about Coca-Cola. August 17, bought from PZ Limited. So we are going to add PZ Limited. So 140 bags of flour at 10 naira each. So that gives us 1400. We also have 400 soaps at 2 naira each. So that will be 800. So that will be 2200 in addition. So we have trade discount. Trade discount of 10%. And 200. So that gives us 220. Actually, this is 20% trade discount. 20%. We have that should have been 216. So we are going to have very great error. We're going to have 864. So this 10%. I'm going to have 1980. So in total we have 2844. So that is total of purchase debit. So we have to open the ledger, open the ledger account. So we are going to have purchase accounts, the credit and debit. So in the ledger, purchase account will be debited. So we have August. So we have the sundries of purchase with the period. So we have 2844. So suppliers account, we have Coca-Cola account. We have a Coca-Cola account. Coca-Cola account. So Coca-Cola account will be credited. The suppliers account will be credited. We have August. So that will be purchase, credit purchase. So we have 864. But also we have the PZ Limited account, the suppliers account. That will also be credited. August, this is August 12, August 17, purchase. So we have 1980. Okay, so we've done purchase day book. So we'll move to purchase return day book. So as Ella said, in the sales return day book, you see this also similar to the sales return day book. The purchase return day book shows all of the goods previously purchased from the supplier but then returned back to the supplier due to some certain reasons. So whenever the goods have been purchased from the supplier and get to the warehouse, goods might be of the wrong type, or the goods might have some default. Maybe they have been damaged in transit and for certain reasons, so the goods will be returned back to the supplier. So the book in which goods previously purchased on credits are recorded, previously purchased on credits which are returned back are recorded, is the purchase return day book or return outward day book. So the procedure is similar to all other procedure in the subsidiary book. The first procedure is that the purchase return day book will be entered daily, while also the purchase return account or return outward account will be credited with total amount of what goods returned back to the supplier, while respective customer supplier's accounts will be debited in the ledger. So the format is similar to all other subsidiary book, like sales day book and purchase day book, sales return day book. So we can have an illustration. Okay, we have an illustration. Right of the return outward journals, that returning purchase return day book of Femi and Sons Limited for the year ended 31st August 1996 and post to the ledger. We have August 15, return to Coca-Cola Limited. That is the goods previously purchased from Coca-Cola that have been entered in the purchase return day book. So out of the 6 crates of Coke at 240 naira each were returned back to the Coca-Cola Limited, 1 crate of Fanta at 120 naira each, and 3 discounts previously over, which is 20%. And also we have August 20, return to PZ Limited. We have 14 bags of flour at 10 naira each, while also we have 40 soaps at 22 naira each, trade discount at 10%. So we have to open the return outward day book or journal. So we have dates, we have the particular, we have the folio, our months, then we have the total. So August 15. So we have Coca-Cola Limited. Return 6 crates of Coke at 240 naira each. And that amount to 6 times 240, 1,440. So also we have 1 crate of Fanta at 120 naira each. That gives us 120. In total we have 1560. Let's trade discounts. That will be 20% of 1560. So we have 312. So that will give us 1,480. So thereafter we have done with this. August 20. August 20, we have the PZ Limited. Return to PZ Limited. So 14 bags of flour at 10 naira each. Now we 1,000. Okay, 140. That give us 140. So we have 40 soaps as 2 naira each. And that give us 80 naira. Then total we have 220. So trade discounts of 10%. So that gives us 22. So we have 198. So the total of purchase return or return outward day book will be 1446. So thereafter we have to post the ledger. So you have the Coca-Cola. So we have the return outward accounts. Return outward account, which is going to be credited with total amount of return. So August, we have the sundries, total amount of return 1,460. So we are going to maintain the Coca-Cola account in the ledger also, which is going to be debited total amount of return. So we have August 15, we have return outward, which is 1248. Thereafter we are going to have PZ Limited account, PZ Limited account, have credit and debit. So we can debit that also. August 20, return outward. So we have 198. So in this class we did sales day book, which is total amount of goods purchased on credits which are recorded in the book. Sales return day book, total amount of goods previously bought, sold rather, which are then returned back by the customer. We did purchase day book, where also we've done purchase return day book, so the return of goods bought previously from the supplier. So we then have cash book and journal proper. So the two remaining subsidiary book, which is the cash book and journal proper, will be properly treated in the next class. So I'm very sure you understand everything being treated properly. So if you have any confusion with the lesson, do not hesitate to replay the video and again